Hey guys, Jonathan Rose here. Today, let's look and see what's the likelihood of the market really crashing and how can we follow things to just simplify. I'm going to do that using three different charts, and we're going to look at the S&Ps, we're going to look at gold, we're going to look at oil because they are all at key pivot points. Before I get into it, this Thursday, Futures Academy webinar, you can click right on the screen. A window will open up in a different tab so it won't interfere with this video. Join me this Thursday. Big surprise for everybody who shows up live. Back to the market, S&Ps. I'm a big believer, guys, that markets don't like to stay around big numbers. They're major pivot points. And to confirm that, I have it on a weekly, a 100 and 200 period moving average. Let's go back and look how often it's gotten to this point and what it does when it's around this point. It doesn't like to stay. Markets do not like to stay around big numbers. That's definitely a lesson that I've learned in my 20 years trading. So right now, 2610, call it a band between 2605, 2610. We're not staying here. Either this market gets wrecked or this market rallies out of control. We are not just going to hang out by this 100 period moving average on a weekly. Oil, darn similar, right? Weekly, again, long-term charts, 100, 200 period moving average. This time, let's talk about the 200. You can see the previous weeks, they're all pretty darn similar, right? A nice tightening, coiling of a range. 52. 52 is going to be major resistance. If we get above 52, it's going to be major support. These are the lines in the sand that we talk about with the members. Oil is not going to stay around this big number. If the market's going to start crashing, if the market's going to rally 1,000 points, oil is going to move a ton as well. Whether it goes up, whether it goes down, not really sure. There's no fixed rule that says if the market goes down, oil needs to go higher. Wait and see. Let the market prove it to you. But again, going back, markets do not like to stay around big numbers. We got another one. Gold. Right by its 200 period on a weekly as well. I am uber bullish gold. If we are going into a recession, if the market does crash, I'm not saying it's going to. As a trader, I want to take what comes. The best way to trade is a balanced portfolio, which means don't speculate. Don't guess on the market getting killed. Don't guess on the market going to rally a ton. Find some good value to play some longs. Find some good value to play some shorts. Trade a nice balanced portfolio. If you do like the idea of getting long gold, here's how I would play it. Gold is probably going to benefit if the market goes down. So that might be a little bit of short exposure in your portfolio. But here's how I would play gold. So I have gold here, and underneath I just put gold relative to silver. It's just gold divided by silver. This ratio historically has lived between 15 on the low side and 85 on the high side. This is the most expensive I've ever seen it. When it gets this high, that doesn't mean gold's going down. It means that gold is very expensive. It's expensive relative to silver, but it also means silver is very inexpensive relative to gold. My feeling is that gold is going to go higher. I'm very bullish gold. Because I'm very bullish gold, I'm still not buying gold. I want to be long silver. The way to express that opinion is I looked at all these different silver names. My favorite silver play is a company called PAS. P-A-A-S. This is what I shared with the members a couple of weeks back. Traded as low as 12.12. It's rallying. I love being long PAS. How to deal if we do go into a recession, if the market does get hit, is trade a balanced portfolio. Find some longs, find some shorts. But if you're just long 3 stocks, the next trade you have to make is either get out of one of those stocks or find some bearish exposure somewhere. Buy some puts somewhere, short a stock somewhere. You don't want to just be long. You don't want to be just short. You don't want to have the same isolated risk across your entire portfolio. My name's Jonathan Rose. I'll see you Thursday. That's when we're having our Masters in Futures webinar. Thanks, guys.